Hello and welcome back. This is David from the Personal Finance Squad. We are in Chapter 4. This is Part 2 of auto insurance. The next spot we're going to cover is collision insurance. Collision is the main coverage on a policy. I would imagine it just about every policy has it. And what it does is it pays for damage to the car no matter who's at fault, even if another person is not involved in the accident. So the insurance company can take over the claim on another driver. If there's an accident and it's said a he said, she said where no one's considered at fault per se, this is a situation where the insurance company acts on behalf of the policyholder to hold the other party responsible for the accident and pay the deductible. So just so you know, depending on the plan, insurance will have a deductible amount. Let's say it's $500. That's a common amount. So what it says is if you get an accident and you need to go fix damage on your vehicle, you're going to have to kick out this $500. It's like they call it a deductible. It's like paying a copay in a sense at the doctor. There's a chunk you're going to have to pay up front just for being involved. Collision insurance is not typically required by most state insurance laws. However, finance companies generally require drivers to have it. So most finance companies will be named as a lien holder on the insurance policy for a finance car. So that's what I was mentioning in the other video, that there might be certain coverage limits, say on liability and or collision, because finance companies know that you're leasing their vehicle, it's their property. Or you finance a vehicle from a company, a new car, then there's a good chance they're going to make you have it on their policy, and they're going to have probably certain coverage limits that they're looking for. Okay, so in the instance, the driver that owns the car, now we said right here, collision insurance isn't required if you own the car yourself, but it's advisable to have some unless the car holds little value. So what we're saying here is, let's say you have a car that's worth $2,000. Maybe even $5,000. There's a point of, if I'm not required to have collision insurance, do I really want to do that? Because what happens is cost for paying for the car over time, will even in a year or two, could be more than what the value of the car is. Or is it really worth it to put that much coverage in a car that's only going to be worth this much money? And you got to remember, if you put the coverage on, so if you add collision, your premium increases. So these are things you have to think about. And in that case, that's a judgment call. You have to decide how much you think your car is important to you. Because if you don't have collision and you bang that car up, that means you're going to be responsible for the full payment to go fix it. So if you get your whole front bumper caved in, then it's going to stay caved in because you're not going to pay to fix it. So again, that's why it's a judgment call. So here's a good example. Suppose a driver owns a vehicle outright that's worth $12,000. Your car receives $5,000 in damage, and it's not drivable. And the only way to fix the car is to pay that $5,000 tab. In this case, a $500 deductible would cover it, and this is what we're getting at. Probably a $12,000 car is worth having collision insurance coverage. So to pay for $5,000, you really only need to pay $500. This is where you have to figure it out. Broad form collision, if you live in Michigan, you're a winner because it's a little extra probably for the cost on your policy, but it's not a big number. And what it says here is that you only pay the deductible if you're at fault. So for example, if I was hit by another driver, then I don't pay the deductible. Now, if I do hit another car and it is my fault, then I do pay that deductible. So this is, again, another example where a state has their own particular rules, and you're just dependent on where you live and what you have to have and what you have the option to have. Okay, comprehensive. This is a very, very common coverage. This is like having hazard insurance, which is on homes. So when you get homeowners insurance, oftentimes in your mortgage documents, it'll be called hazard insurance. It's probably not the most smoothest word. It'll be something a little more euphemism, if you will, to make that word sound better, but that's what they call it. Comprehensive insurance covers a wider variety of things, but it's not collision. It's not when your car gets banged up. Here's some items on here. So you see, like, auto theft's a very common one, right? So if you live in a a city where the crime rate's high, you're probably going to certainly pay more for your comprehensive, but comprehensive would cover someone stealing your car. It also covers things like they're unexpected, like you get big hail, golf ball hail, and you're parked in the parking lot at work and come back and you get dents. Certainly falling objects like a tree. My wife and I actually had a tree fall on both of our cars the day after we came back from our honeymoon, and her car was totaled and my car had quite a bit of damage on it. Cracked windshields are probably the most common one. You're driving down the road and for some reason you get a chip and then it cracks, especially if it's cold. It spiders and then you have to get it replaced. Broken glass, certainly fire. Hitting a deer would be a good example here. Accident with an animal. Maybe you're in a flood zone or the levee breaks in Mississippi and flows down somewhere to your car and the flash flood hits and your car's underwater and it's undrivable. Certainly vandalism, that could be keying a car or putting a knife into tires or spray painting. A windstorm or tornado, right? Certainly that makes a lot of sense. Explosion, floods, we just kind of mentioned flood with water. So you can see this is hazard. These are bad things that go wrong to your car. And what you're going to notice here, most of these are when you're not even in the car. But sometimes they certainly can be. It just depends. So you could be parked when these things happen, or hopefully you're not in a car when there's a tornado. So, this is just the kind of the unforeseen, unfortunate events that happen that covers its own section, and that's why they just call it comprehensive as opposed to liability. They want to make that about the driver itself being at fault. I kind of mentioned this already, but you say, you know what, just about every driver's had a rock fly off from a semi-truck, take a chip out of the windshield, or hit a deer. You've heard people hit deer, right? Depending on where you live, it's a common thing, and deers can really mess up a car. So it can be optional or required depending on whether a vehicle is financed or leased, which means it also may depend on where you live. But this seems, on the whole, to be pretty common. If you finance a vehicle, again, the lender wants protection. Let's say it's in the flood and the car is completely totaled, and there's a high expectation that you're not going to cover for that car because you can't drive it because you have to go out and get another car, which means in a sense you'd have two payments. They don't want to take that risk. They want to make sure that the car is covered. So really, you're paying insurance for them in a way to make sure that their protection's there. You're mitigating the risk. You're making it more risk adverse. So, as with collision, a deductible may be required for vehicle repair. So your deductible for comprehensive oftentimes is lower unless maybe you live in a crime-ridden area. You might see more common deductibles like $250 as opposed to collision at $500, for example. These items probably happen less frequent than they do like a car's getting hit and fender benders and banging doors and things like that. So another item here is comprehensive may cover compensation for car rental in the event the vehicle has been stolen, because you need to get around and do your daily life and go to work, so that may be part of your plan. So here's another thing. This is like a little tip. If your car has an anti-theft device, and most newer cars do, oftentimes the insurance companies, knowing that's a theft deterrent device, they'll give you a smaller premium. Okay, so we're going to end this section right here, and we're going to get into, you can see right here, medical payments and umbrella policies, and we'll see you in the next video.